Welcome back to the channel. I'm Foreman, and today we're going to be talking about Boohoo stock. More importantly, trying to answer the question of why is it dropping at the moment in the markets, as I believe it's down around 18 to 20% in the last month. And furthermore, is it worth buying now, or is it one of those where you should sell the dip? And if you like the video, please drop one of these to help beat that YouTube algorithm. Firstly, why is it dropping? And I think there are a few core reasons for this, and they're all combining, creating fear, uncertainty, and doubt in the markets. As previously in the last set of the results and trading update, I believe June, what we had seen is that their guidance, whilst their performance was quite good, we had 54% revenue growth in the UK, mid 40% growth in the US, whilst the rest of the world and Europe were actually holding us down and I believe in negative territory. The guidance overall for the revenue, despite the UK and US taking up a majority, was actually only 25% revenue growth, which compared to years before, well, for instance, they even have a 2-year compound annual growth rate of their revenue of 38%. So to give a guidance like a major amount lower than that is quite concerning to hear about. And so it does make you wonder, perhaps this is where more doubt is coming in, and markets don't like uncertainty. So when there is guidance suggesting that it is lower, this could be bad news. However, I am partial, and I like companies that managements that say, hey, look, this is our revenue guidance. And then if you really look into the company and find actually with the way they're making sales and such, this should be above this, the whole idea of under-promising and over-delivering, this could certainly be something they're doing. And after all, it has happened in previous years. Although we could also take into a factor their recent acquisitions. We got the brands that they bought from Arcadia, such as Debenhams, such as Burton, Wallace, Dorothy Perkins. And so these brands may negatively impact the cash flow of the business. After all, this was an investment they had made. And if Arcadia went bankrupt, then perhaps some of these brands themselves aren't actually cash flow positive, meaning that not only are they unprofitable, but they may also be literally bleeding cash, which wouldn't be surprising to me, as then they would have held up more value. But that's what Boohoo does. They buy these brands at near bankruptcy at a cheap price and then rebuild them using their online-only platform. And so it makes sense, and these brands give them well-needed diversification. Debenhams, more specifically, has their beauty range, which can really be used as their advantage when really expanding their sectors and what they encompass, because then if the beauty range with Debenhams is a success, they could then transfer this style of cosmetic items over to Pretty Little Thing and Boohoo, and then it starts to really transfer across the brands, and then they perhaps could open into other industries, which would be very interesting and great for diversification of revenue over different industries. There is also the fear, uncertainty, and doubt over the current ongoing lawsuit. If you haven't already heard, there is that lawsuit that could be over 100 million US dollars in fines. And this is due to the idea that they were creating false promotions, where the sale prices that they offer that may be 40% off weren't actually what they planned to initially sell them for. So for instance, I have a product, I'm selling this shirt, right? And I wanted to sell it for £10. Well, that's the price I've put. But because I'm putting it on sale every single day, it's actually meant to be worth, I actually intended to sell it for about £6, but because I've got a 40% discount on every day, it's very much misleading. Although I very much understand this from a very sales-focused business. We had the co-founder, Kamani, I can't say his name, I apologize, and he's always pushing sales. And some of the emails that, for instance, the lawsuit had noticed, it was like, we want sales, sales, sales. Don't speak to me unless you've got something, or I'm ad-libbing, and I did in the last video too, but the idea was that he wanted every idea to go through him because he wants more sales. And more sales is very important to a business like Boohoo, and such, it makes a lot of sense. And then the lawsuit itself threatens over $100 million. Firstly, Boohoo have got the cash on the balance sheet. This is not a threat to Boohoo. Sure, it would certainly set them back and it wouldn't be great, but they've got the cash available. It's not like they're going to have to take up risky levels of debt just to pay it off. Furthermore, I think it's just a number that they've thrown about just to make it more scary. This could be over $100 million, but in reality, if it is something, it's probably going to be far less. But the idea is there, it's got that could, it's got that uncertainty, and the markets never like uncertainty, hence the price dropping. But then there's the other concern about the lawsuit is that the co-founder does not wish to testify, and so they're trying to find compelling evidence to make him testify in the first place. And then if he doesn't want to testify under oath, then what may he have to hide? perhaps there is some more malicious ongoings behind the scenes, as we did know that in the past, about a year ago, they certainly had some governance issues with the likes of the modern-day slavery accusations, which were derailed by saying that it was a supplier's subcontracted supplier. And so it basically had meant that it was very difficult to track, and that may have led to the reasons why the ethics in the supply chain weren't so great. And so if he does not wish to testify, then it's very likely that is crafting uncertainty in the markets and the share price is starting to drop. And then we can combine this with the news that they actually were deciding to sell off their franchise in the Middle East to a company called, and I don't quite know how to pronounce it, Al-Shaya. Basically, this was Debenhams' franchised brand. And when I say sell, I don't mean actually sell the stores. I mean sell under their name. Actually, that might not be right. The idea is that they're going to sell under their name. They're already franchised stores, but basically Al-Shaya would then be doing the main operations and running the store completely. And then basically it'd be a shared amount of revenue and profits, which could be seen as a negative because why isn't Boohoo able to do this? Does this mean they're incompetent in that specific area in the world? I see it as more of a positive. They're diversifying their revenue streams, and that means they can focus their attention elsewhere. This company that has already been running Debenhams in the Middle East knows how to run Debenhams in the Middle East, and so letting them deal with it themselves is a great way to get some easy revenue income, but also at the same time focus your intentions and energy elsewhere, like growing more lucrative markets like the US or the UK, or even the rest of Europe. And so it makes a lot of sense as to why they have done this. And this could be already an unprofitable area. This could have been the idea that they wanted to cut off an area that they may not understand or give it somewhere else because they don't deem it worthy. And it makes sense. And then that way they're reducing their perhaps negative cash flow and can focus elsewhere, like I mentioned. And if you'd like to sign up to my stockbroker Freetrade, you can get a free share worth up to £200 when you use my link in the description down below. Although I would argue that the Middle East is certainly a tricky location to market, as they do have a lot of complexities involving their legalities and also their societal behaviors. For instance, I don't know much, but I believe rights there between genders is very much unequal, and this could lead to quite major problems when trying to sell clothing, or perhaps certain clothing won't fit what they view as good in society, and so it would be hard to make sales. And so giving this whole section of the brand to that other company that already runs a franchise seems like a wise idea to me. And then if they do deem it worthwhile in the future, they could likely reacquire these stores and online websites. But there's also the argument over growth stocks and inflation. In fact, the majority of my portfolio has been falling as of late, and that's because we've got the fears over inflation. A rise in inflation means that there's a lot of spending that's happened. This leads to interest rates potentially rising, which interest rates rising isn't great for the stock market because then your cash would seem more valuable sat in either a bank account or in bond treasuries, for instance. And so this is where things get complex, and I've only just about wrapped my head around it. Especially small growth stocks, let's say more riskier growth stocks, ones that aren't actually profitable and don't have positive cash flow. These would struggle very much because this is a time where the value of what they're making is going to lose value effectively. That's what inflation is. It's the idea that usually annually the value of our spending goes down by around 2%. That's at least the Bank of England's target. Wherever the true figure is, I'm not too sure. But because we've had the lockdowns and because we've had a lot of people saving and not necessarily spending, it's going to push prices up. And then we've also got to take into account the massive amounts of quantitative easing, both in the US with the Federal Reserve dumping trillions into the markets, and also the Bank of England adding a fair few £100 million also into our own markets too. And as they say, when the US sneezes, the whole world catches a cold, meaning that if the US is struggling or has fears over inflation, the whole world is certainly concerned. And this is no different to Boohoo, as they do drive a lot of their revenue from the US. And then you've also got the split between growth and value stocks. A few months back, the trend had certainly reversed, and we could see that value stocks were performing very well and that growth stocks were struggling. At the moment in this market environment, all stocks are certainly struggling, but you'd see more of a preference to these value stocks. That's because value stocks are seen as more of a short-term investment. Maybe not directly, but they are. This is because if you invest into a value, let's say mining stock, let's just assume it's Rio Tinto, that has a price to earnings ratio of around 5 times, and that you pay £100 per share, you're looking at paying around £100 for £20 of earnings in each share, meaning that providing they're able to keep earning at the same rate, that you would be getting £20 in cash flow each year, and then in that 5-year time horizon, you would assume that you've made your money back in terms of the profits of the business. Obviously, this doesn't reflect the actual price of the shares, but perhaps they're paying out a very chunky dividend, and then that way you would be getting a lot of your cash flow back, or at least some of it, but then it would make the investment worthwhile. Whereas with these growth stocks, they are certainly much longer term investments, especially those without cash flow, and you're looking 10, 15 years down the line. This is because they're not earning as much as they could be, but then I think the markets don't factor into account that in these times, they could certainly be growing their revenue. And so whilst, yes, if you look at it now, it may take 10 years if the revenue stays as it is, but their earnings per share from the current price has a lot of potential to keep going up. And so in this type of market environment, I think it really disregards the growth and earnings potential of these growth stocks like Boohoo, and thus they are usually priced downwards. Although that's great for us investors that do like growth stocks, because it means it would be a great opportunity, as I think it's a great opportunity for us growth investors to continue either increasing our position size or opening new positions in stocks that you've been wanting to buy for a while. Especially when we consider the fact that Boohoo's earning or revenue guidance is 25%. In previous years, they've done way more than that. You could imagine that their cash flow is going to increase by quite a substantial amount each year, and then it makes it more understandable that this investment would likely pay off quite quickly. Therefore, I feel that in an inflation-fearing environment where it's being speculated and spending is low, short-term assets are certainly going to become more favorable, and that may correlate in perhaps the short-term bond markets, although this is an area that is still currently out of my depth, mainly because I don't fear inflation. Perhaps I should do, and that would demonstrate a massive lack of understanding. However, for myself, my assets are in the stock market, a majority of my net worth. I've not got much cash, and therefore I don't have much of a concern if I have a loss in spending power, especially because I don't have many regular bills either. I certainly feel that in more staple industries, we're looking at like food, beverages, and tobacco, these will become more favorable investments as time goes on, and if inflation continues to be feared, that's because these are things that are always going to be bought, and therefore spending should remain quite high on them. I would say Boohoo is a step closer to consumer staples than it is discretionary. This is because clothing is important. Cheap clothing certainly is very important to some, and whilst a lot of people that perhaps spend with Boohoo would make it in more of a discretionary way, they might buy a dress, wear it once and then get rid of it, it's certainly still a staple item that people need in their households and in their wardrobe, and so it makes sense to me that Boohoo will remain resilient during these times. And I believe personally that this is just a short to medium term negative price action in the shares of Boohoo. Should they really be trading as low as they were a year ago with the likes of the ESG funds not being involved anymore? Perhaps. Do I think it's logical? No. But then is there really logic in the markets? After all, they've made cracking steps in the last year to really push forward and improve their ESG, with the likes of their audit supply chain being released, and for instance, the appointment of Sir Brian Leveson and him keeping an eye and monitoring the plans they have to do and their changes in the business environment. He's always remained quite positive, although he is under the payroll. This could mean that this is great for the future, and that buying now, you're buying at a company that has had ethical, social, and governance issues, but is improving, so that in the longer term future, you may have a fantastic value on the price. And in my opinion, I've been buying shares. This dip has no logic behind it. Yes, you've got the lawsuit. I think if it comes out, we've got the cash to deal with it. I don't think this lawsuit will go through anyway, and I think they're being a bit pedantic, but I don't know the US too well, and so they could really do that. But then we've also got the likes of Alshire and Debenhams. Ultimately, I think that's a great decision. Diversified revenue and profits, that's a win for me. Sure, we will need to see the next trading update to see how well truly Debenhams, Burton, Tim Wallis, and Dorothy Perkins do, but I'm confident in their outlook. Maybe they won't be good now, but then they could really start to grow these brands, as they already do have their brand name and awareness. And so they may be able to target older audiences, get more diversification overall, and really start to be a clothing apparel giant that is feared by many other brands. And if you're interested in my free UK stocks to buy in July 2021, and then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.